Good morning, everyone. I'm Vince Lancy, and in today's market rundown, we will explore a new report by ANZ Bank claiming that gold will trade 25.50 by year end. And it's a very good analysis, in our opinion. We'll have some color for that as well. But first, let's go to the markets. Gold's up 7 and change. The dollar is down 15 at 102.44. 10-year yields are 383, down a pip. S&P 500 is up 4 handles at 54.35. The VIX is 1841, up 30 basis points. Gold is 24.73. A hair's breadth from a new all-time high. We did have a new all-time high close 2 days ago, and at this rate, we're going to have a new one today. Silver, 27.91, up 6 cents, barely tagging along. Copper, 407, up a penny, up 37 basis points. So basically, silver wants to be copper today. Let's see how it acts after the number. WTI, down 31 cents. It's been running higher again at 78.45. Natural gas, 214, up a penny. Crypto, up a penny. I'm sorry, 1% to 2%. So it's Bitcoin, 61,300 and change, up 745, and Ethereum 2751, up 48. Palladium and platinum. Palladium now above platinum. I got to tell you, I don't know what that's about. If I had to pick something, if I had to tell you a story, I would have to say because they're betting on Fed easing, and palladium is more currently economic than platinum. But it's flipped again, right? 948, 942, up 10 and change, up 6 and change. Grains are mixed at the extremes. Soybean is up 60 basis points, whereas wheat is down almost 50 basis points. So soy is up. Between soy and wheat, you got a 1% spread move, 991 up 6 cents. Corn is unchanged, and wheat is 542 down 2.5 cents. So grains are doing their thing. Let's go to, well, you can see the gold chart there. We'll discuss plenty of gold today. So let's look for that. Where is that? Oh, there it is. Here's why ANZ Bank sees 25.50 gold by the end of the year. ANZ is a bank out of New Zealand, and as such, they represent a lot of Eastern flows, and they see a lot of Eastern flows. And so when you're talking about a bank that's positioned out there, they're going to have a lot of insights into what's going on in Asia and the area. And their charts and their information reflect that. All right, let's get to the specifics of it. Before we do that, here's the front page CPI prep right there. That went out very early this morning, and Founders got a copy of that last night. This is a special write-up by, it's an excerpt from Grants. It's really, really good, and it's almost a month old, so we're sharing some of it. And there's the BOA report yesterday about silver. Plenty more in here. All right. Main events. ANZ Bank's latest on gold was posted yesterday, so we have it, right? The Fed's cutting cycle. Here's the key reasons for their rationale. All right, in complete summary, the Fed's cutting cycle, when it begins, will attract strategic investment in gold. We have lifted our year-end price target for gold to 25.50 per ounce. Now, the report goes through the reasons for this, pros and cons, and it makes a very strong case. And they also bolster things that we have said without actually drawing attention to them. And we're going to get into that. We'll get into that in premium at the end of this broadcast. But right now, let's touch on the major points. Central bank purchases and physical demand continue to provide a strong base for gold demand. All right, so here's their reasons for their price target in broad strokes, right? Easing monetary policy will give a final push for gold to break out higher, all right? And their reference to that is we are approaching the start of the Fed's rate cutting cycle. And that chart shows how the market historically performs during rate cutting cycles. Strategic investment is coming back. The key word here is investment, and they're referring to Western investment. Eastern investment has been here for over 2 years. OTC physical investments in gold in the over-the-counter market increased to 329 tons in Q2 2024, the highest since Q4 2020. That's significant because that's Western investment coming in over the counter. See, the BRICS aren't buying as much this quarter, but the over-the-counter market is. So somebody in the West at a central bank level is buying gold. A seasonal lull in physical demand. Demand has been surprisingly resilient to rising prices in the past 18 months. Total demand reached 3071 tons in 23 and hit 1115 tons in Q1 2024. Demand has been off the charts in 23. So there is a seasonal lull. It's not even a cyclical lull. And you know what? In my opinion, it's not even a damn lull, okay, based on the OTC market. But they have to say that, China's public purchases have decreased. Meanwhile, India is now number 2. Central bank buying is still healthy. Moving on to that concept. The People's Bank of China made no purchases in July for the 3rd month in a row. The Reserve Bank of India, however, has become the 2nd largest buyer of gold after Turkey, with purchases of 37.3 tons in the first half of 2024. When China's not buying, India is. That's how it works. China's letting the market fall. So it's a cooperative. They're working together. All right. Now, the key resistance for them, for their technician, right? This is separate from the actual fundamentals of the report. Is the key resistance is the record high of 24.80 per ounce, and it needs to be breached for prices to move in a range of 2,500 to 2,600. I will comment on that this way. 2480 is resistance because it's a new high. I don't know that it's key. I'm not pushing back against them. I want to see how it acts the next time we get there. But let's just say that I think they're right in the sense that next time up, it probably won't matter. I don't think it will matter. In fact, I think we're going to trade 25. I thought we were going to trade 2,500 by the data today. So we've got 40 minutes for that to happen. Otherwise, I have to make good on eating a toupee, which my hair's real, I swear. So I'll figure something else out to eat. All right. So here's an excerpt of ANZ Precious Metals scorecard. We reconstructed a piece of it for gold, silver, platinum, and palladium. This is only a piece of it. It's actually very detailed and extended. They go through each characteristic. They have basically it's a checklist, right? Bull, neutral, or bear. And there you have it. We have the full analysis, the report, and the whole grid breakdown in Premium Bottom. If you stay with us after this, we're going to actually go through those points discussed up top in more detail with some insight into India that you're not going to hear anywhere else. Anyway, where were we? Market news. I just want to draw your attention as a metals person to the section on Elliott Investment. Elliott Investment Management plans to nominate a slate of candidates for Southwest Airlines board, escalating the activist investors' push for sweeping changes at the struggling carrier. Now, this is kind of esoteric, but I want to hit you with this. Elliott has been buying mining assets, or they've allocated money to buy mining assets. I think Elliott's notoriously very activist. They buy a piece, they demand changes, and they usually get their way. With countries, sometimes they get their way. I think it's interesting that they didn't buy any mining stocks publicly traded yet. Does that mean that they don't think they're undervalued? Well, no, they're undervalued. Maybe that they think that they can get more leverage buying assets from those mining companies, the ones that are distressed, rather than buying the mining companies themselves. I'm just saying, activist investor buying assets from mining companies instead of mining companies itself sends alarm bells, for me. I have scar tissue from when John Paulson bought mines and nothing came of it. Just keep that in mind if you're a miner person. Data on deck, CPI 3%. We sent a grid out on that in the report attached. and what we think the reaction grid will be for gold headed into it. All right, let's do a final market check before going into the premium section of things. All right, let's check on that trend line. I took it off. I think I took it off. I took it off, right? I mean, let's put it back so you can see what I'm talking about here. It's just ridiculous. Let's attach. No, it wasn't that one. It was this one I attached. All right, and that's the trend line. That's where it is now. Is it? Maybe I had it here. Did I have it here? Well, I'll tell you what, it looks better here. I think it was here. So there's your trend line now on the hourly. And when the number comes out, if you're a short-term trader, when the number comes out, if we get below this line, when the number comes out, if the number is bearish for gold and we get below this line, I would not buy the first dip. I might buy the second dip. I might buy the third dip, meaning here or here, but I would not buy the first dip. If the number is bullish or neutral and we go below here and the market gets back above the line, I would buy the re-entry above the line if we pierce it on a number that's neutral to bullish. Otherwise, the line is your friend, and that's what's going on. All right, stay with us, and we're going to do the premium section now. All right. Have a good day, everyone. All right, here we go. Premium. All right, do not share this. There's the cover. All right, easy monetary policy to give the final push. These are their words, and I'll